Hey, good morning, everybody. Happy Tuesday. How are you? We're a little bit early this morning, trying to get something out there for you ahead of the market open. Whether you got time to watch it ahead, I don't know. Bookmark it, like it, add it to your favorites there. Before we jump into it, we're going to talk about SoFi for just a quick second. The reason is they reported earnings. We had talked about SoFi all last week. We talked about the $13 calls for May 16th that appeared actually on Friday, April 17th. Put out the trade idea on Monday. I put it out last Monday. I gave my entries. I gave what I was looking at. I put that out last Monday for my ex subscribers there. We alerted the $13 calls from May 2nd at $17. They're over 100 as SoFi trades at 14 following earnings. We also alerted the $13 calls for May 16th with a little bit more time and expiry, and those also made quite the move already. So they were alerted at 38, now 114, and a high of 126 on Monday, probably even higher today as they're a little deeper in the money. And then the 13C 5 May 2nd, we alerted at 17, now 91. So the stock was 11.04 at time of alert. It's now trading at $14 following SoFi. Pretty strong earnings from them this morning. Raised guidance for this year. Their adjusted EBITDA was up 46%. Adjusted net revenue was up 33% year over year. So some really good things there for SoFi. So I know I've seen a few DMs and a few messages and replies, for the flow, and always happy to share the data. So I'm glad that a few of you were able to capitalize on the opportunity. I was able. I shared my entries in real time. We shared the trade idea. We shared the thesis. And I mean, even before the flow, we're going to open up that chart for just a second. There was just some technicals that were lining up. We saw the flow. This was here on April 17th come in. And then Monday was the actual trade idea, and I like the increased volume as the stock's just tracking along its 9-day EMA. So it was sitting on its 9-day EMA, just kind of ahead of earnings. A little bit of sentiment came across positive last week. There was a lot of bullish sentiment towards possible upside in the stock regarding earnings. And by Tuesday, we already saw a move as SoFi had went up to 1143. So it already had moved from the low on Monday when we alerted the trade idea of 1050. It already had gone up a dollar. By then, the news was out. SoFi kind of made a technical move and I made a nice clean run right over here over the 200-day SMA, and that was just something to watch. As the stock continued, we saw more volume ramp up into earnings and then reclaim the 50-day SMA. So quite a technical move from just a 9-day breakout with a little bit of volume option flow and some positive sentiment, some new buying, some more option chain activity, and then boom, we got the move there on SoFi. And I think already this morning, like I said, trading at 1406. So not bad there. If you followed the move, we got you in about $10.50. The stock's at 14. Can't really be mad about that on a week. Not too bad on a week turnaround. So, but let's talk about some GameStop here. Let's take a look at some option flow. Let's pull up the chart as well. GameStop, like I said, just been consolidating up. We had that first gap up back around earnings. I know everybody's excited when the stock rallied to 29, then the convertible notes, and as GameStop moves closer to that conversion price, you're going to see, the stock just remain in this position. Basically, the closer it moves up, more of those calls go in the money as we talked about, and that introduces more FOMO buying and more call buying, and that's that gamma we've talked about. I shared the video on my X a few times, so make sure you check that out. And then as you get closer to the conversion price of these notes, the arbitrage desk and the hedge desk, those that are hedging those notes, or the holders of those, they short the common stock while they buy the notes. Well, as the price is going to move up back to the conversion price, they're going to release, those shorts essentially, and purchase back what they sold short, just as they don't need the hedge anymore because they're able to take a conversion for shares or whatever they would like to do. But if you look at the stock, though, I mean, it's been great. It's consolidating above its 9 EMA. It's held the 9 EMA. It's trading well above its 200 SMA. So something to always keep in mind. The 200 SMA yesterday was 24.95. So 25 has always kind of been that level with GameStop. Last year it struggled to get to 25, and when it did, it kind of stayed there and became the floor. And now it's kind of seen, every time GameStop gets right below 27, the bulls jump in with calls or stock, and it kind of lifts the stock back up. Also, there's a lot of open interest out there and gamma. So the stock gets down too low. Obviously, shorts are going to cover a little bit the position because they don't, they're going to just notch it down a little bit in that regard. I don't believe there's a whole lot of short interest within the stock other than those that are like arbitraging the stock for the convertible notes. But I mean, look at the stock. It's nice consolidation, even on lower volume. I mean, every time the stock sees, just the other day, 26.84 and it bounced. Yesterday it saw 26.98 and bounced. The last low before that was that 25.79 back on last Monday. And it bounced right off that 9 EMA. Now, is this a guarantee? No. Stocks and price, they have memory. They know where they've been, they know where they want to go, and they know where they've been before. So that's why I often use these longer time frames, and longer moving averages just to try to balance it out. So, I mean, if you look at the daily, these are a nice strong move when you've got a shorter time frame crossing a longer time frame. That's always a strong move, but you got to make sure you follow. We need continuation, follow through, continue volume, continue option flow. I mean, GameStop's been healthy in that regard. They're sitting on a ton of cash. Not sure what the earnings will look like this next quarter, but they got a ton of money. I think a lot of people are thinking that they bought that they bought Bitcoin around 75 and loaded the dip. They might have. I mean, they asked to raise money to buy Bitcoin, so that might have been what they did. We'll just have to wait to see the earnings statement or the balance sheet. But let's jump over to the net flow yesterday, because I noted, the put premium kind of flat. It was a little up in the morning, but then it had decreased by the end of the session, and there was a slight curve up into the net call premium into the close. But net call premium was actually down negative for the day, so there was nothing too exciting in that regard. The largest impacts, because we use that net impact, so we're going to look at the chain here, was the $20 calls for May 16th probably being wound down. $22 calls for June probably wound down and or exercised, depending on entry. 20s for June saw some activities, and 30s for May. So let's look at those 20s for May 16th here so we can get a visualize, and we'll take a look at the open interest as well. Yeah, so as I'm selling, I wound that down. So about 900,000 in premium yesterday, and you can see the volume about 1,100, 1,200, but open interest decreased. More than likely, trader exiting that position. Exercised the call, exercised those, might have been exercised or assigned. See if we go all the way back here, see the last 30 days on those, buy, and then a big sell here. Probably just taking profit or exercise. There's a couple different ways that could go, but the open interest did decrease. And that was a good chunk of that net call premium coming off the table yesterday on Monday. And then again for the $22 calls for June 20th, the same kind of thing. We're starting to get closer to the May and June OPEC, so we're going to see some changing in that regard. It looks like a lot of that was multi-trade yesterday. Looks like they sold the 22s for June because the open interest did increase, but you can see this multi 95%. You can see it up here. If you use unusual whales, it tells you basically the trades more than likely were a combination of something. So let's try to look at it here for a second. And what that means is they weren't just a single leg trade. It was put in with something else. So we'll take a look at that here. And when you got unusual whales, it'll denote it. So it looks like they sold $22 calls for June and bought the 30 calls for June. So a call credit spread is what that's called. So you sell the 22s and buy the 30s simultaneously. At least this particular transaction was based on the size and the time of the fill. So a lot of those were multi-leg on Monday as well. The $22 calls for June, but they're in the money. So let's see here. 20s for June also saw activities in the 30. 20s yesterday, about 900,000 in premium, 1,100 volume. About 25% of that showed up, so 237 open interest. Looked like the same buyer right here, and then panic sold at a loss. Not necessarily, but when you see like this equal size kind of candles and very quick, I assume that somebody bought 200 calls or 200 of them at 8.15, and the stock came down a little bit and they cut the loss because then 200 goes right back out the window. Could have changed hands, but that simple transaction. See, bought for 163, sold 155, lost about 8 grand. So very quickly too. All for it to just come back. So, but it is a in the money call for June, so you never know the scenario or the trader's intention in that regard. And then the $30 calls from May 23rd also saw activity yesterday, about 600,000 in premium and 6,000 volume, and over half of that carried over in new open interest. So some traders might be feel a larger move is coming, or just a continuation of the move, or they might be playing just volatility. For example, they started getting in here around a dollar, $100 each, $98. So yeah, we'll see. You'll see what they did. I mean, there's some multi-leg attached to that, so other side of the trade, just about 9% out of the money. So I don't know if someone sold a bunch here and bought them right back, for profit there real quick. Sold at 107, bought back at 95, $12 per contract profit in about 5 minutes. That's possible. You see a lot of day trading, not just with GameStop, but with a lot of stocks. So we'll take a look here and take a look at the highest volume that did break out over yesterday that occurred. So you can take a look at it here and add it to your notes for the day. Pause, screenshot, do what you need to do. The highest volume here doesn't necessarily mean that's what's happening. Again, a lot of it's split 50-50, so buyers and sellers. Nothing that really jumps out and says, hey, this is super directional in that regard. The 30s for May 23rd, we just talked about that, the 600K volume, 600,000 premium, 6,000 volume, about over half of it appeared. So some traders might be, like I said, betting on some continued upside. $28 calls for this week, just slightly out of the money. About 250,000 volume yesterday, again split between buyers and sellers, and about a third of the volume appeared new open interest, with some of that, going down towards the end of the day. So you see a lot of times these calls get bought down low and then sold again real quick. So I've traded intraday calls on many names, including GameStop. I look for opportunity, I look for volatility, and I look for profit. that's the whole point of any of this. So let's see, the 27s and 29s were also there. Just lower volume. It was kind of a lower volume day in that regard. Nothing that really jumped out. Like the 29 calls for this week are out of the money. Did see about 100,000 in premium, and about 15% of the volume yesterday did appear new open interest. So nothing too crazy. But yeah, if we look yesterday, total premium again pretty light. It's been light the last couple of days, which is okay. Stock consolidates, holds a good price, flows along its moving averages, even without strong option volume or any posts by Roaring Kitty or anything like that. The stock does just fine on its own. It's got $6 billion in cash, so that's been it's kind of a big stronghold. And I think what we'll see is if GameStop did add Bitcoin, I think it will then become a little more responsive, like to the price of the stock. Kind of how MicroStrategy will take some bigger swings with the price of Bitcoin. I assume if GameStop's added a bunch of Bitcoin, I assume there'll be some kind of move in that regard. If GameStop, or if Bitcoin dips, GameStop may see moves that are similar to Bitcoin if they've got a bunch on the balance sheet. We wouldn't know that until they come out and tell us. So, like I said, we take a look at where the bulk of that money was spent on the options yesterday. We'll pull that up for GameStop so we can give you that kind of clearer picture here. Let's see, the $30 calls, those were, it looked like probably a cross trade. $30 calls, December of 27, see 1,000 volume, appeared new open at 1.2, but it was a no side trade, so my guess is probably a cross trade. We'll pull it up here because we can do that. I mean, when you have unusual whales, you have access to every single bit of real time option flow data. It's not like those other platforms that don't give you access to all the real time data and then just kind of summarize the data. I can see every single order hit the tape in real time with unusual whales for every single stock on the market. So you get what you pay for with a flow service. So if you want a good one, get unusual whales. If you want a less than good one, get a competitor. So let's see. Yeah, that was a cross trade. So cross trade occurs when a broker executes match buy and sell orders for the same security, but across different client accounts and reports them on exchange. So this could be a combination of multiple people's intention or trade that came across. So it's flagged as a cross trade. I usually filter most of those out because a lot of that's just noise or just specific to a trader, a hedge, arbitrage in that regard. So let's take a look here. And let's see, the 20s for May, 16, like I said, those were wound down. You can see that little bit more bid side volume. was about 860K. We try to look for things about 500K or larger. Like I said, it's a pretty light day yesterday. Didn't really see anything too exciting in that regard. Just seemed like a regular day. Stock held its own for price, but as for like anything jumped out in the option float, nothing in that regard. So we'll look at what changed in regard to like the open interest this morning, because I don't believe there was a lot of big changes in this morning. So we'll take a look here. It was the 30s for May 23rd, which we talked about. 28s for this week, 30s for this week, 30s for the end of May. So not a lot of increase there in open interest. And we'll go ahead and flash up the decreases there for you as well. And you can sort that on many different ways when you use this platform. So it just depends what you want to do, how you want to filter and sort your data. Let me just try to sort that here. So here's where it decreases and open. Not a lot, like I said, not a lot of big changes. Some of the 20s from May 16th came off the table. Looked like some of the puts came off the table as well. Those 26 puts for this week. Let's look at those. See some volume yesterday at the ask, and then open interest decreased. Somebody could have bought back what they had sold. Somebody could also be buying these, so they've kind of gone down in value because they're out of the money and you're close to expiry on Friday. This could have been somebody selling them right here. A bullish trader might have thought I'm selling these puts at 23 because yesterday they were at 17, so they're up about 50%. So there's so many ways, you can sell puts, which has got a bullish sentiment. Sell calls has kind of a bearish sentiment. Buy calls has a bullish sentiment. Buying puts, bearish sentiment. So a lot of different ways to trade the stock. Not just GameStop, but any stock. So I'm going to go back over here. We'll pull up our gamma here just so we can see how that's changed. It has an increase for May into the June OPEX, which is what we've been talking about the last few months. It's kind of the same thing that happened last year. So I could just say, that highest open interest at 28, 29, 30, the stock moves up. More of those calls go in the money. It's about $20 million for every 1% change in price by the market makers. And they're long gamma, so essentially they're looking for upside in the stock. About 2.6 million shares on the net gamma exposure. For those that aren't familiar with spot gamma exposure, go ahead and pause right here and grab you a screenshot and read through spot gamma exposure. I talk about it all the time, so I don't want to spend too much time and sound repetitive to those that watch the videos every day. I'll pull up here. Pull up this delta here real quick. All right, let's see. Max Payne on this week at 26. Okay, wanted to look at that. So, a lot of calls out there. A lot of calls out there in that regard. All right, here. We'll go back over here and look at our gamma for a second here. And we'll look at our highest exposure by strike. Still, like I said, that strong net gamma. Just things that are slightly out of the money. 27.50, 28, 28.50, 29.30. So it's your strong net gamma. So we talked about as the price moves up, it puts a little bit more pressure on the stock, creates upside pressure as market makers hedge, which also you see, more people buying calls, more people buying the stock, increased positive sentiment on the stock, which gives a bullish nature, which can lift the stock also. On the inverse of that, if you see a lot of calls sold off, that decreased market makers will release the shares. They've used the hedge against those positions, which creates that downward pressure on the stock. You've seen it. You know how this works. And then the net gamma, like I said, that expiry, yes, this week, but it has been building into the May and June OPEX. Each week, this has been getting a little bit larger, meaning they're building out the gamma and building out the option chain into May and June, and continuing for traders continue or betting on the same price, maybe upside. There is a little put gamma out there, but it's mainly been kind of taken charge by the net gamma that's in place. So also same with the delta. Strong net delta. So it's been strong at the 20. Not much there on the put side. Very strong again on the call side. So You see a stock move to 28 or make new highs 29, 30, it gets exciting because then the option chain, more of the calls become in the money, which is going to create further hedging, further strategies, further buying. So you've seen what happened. You've seen this play out before. You've seen it a few times. It happens often. So you just got to kind of be ahead of it. You got to be ready. And the way you get ready and ahead of it is you follow the flow. You follow people that post, data that's actually meaningful. You can't just say, oh, they're loading 1.2 million shares in the dark pool. I mean, some people don't realize, like the order yesterday. Let's talk about that. Because everybody's like 33 million of stock in the dark pool yesterday on GameStop. Yeah, that's fine. You're right. However, in the stock market, you can't have a buyer without a seller, and you cannot have a seller without a buyer. So if you see a large order in the dark pool, it could be a combination of things. It could be somebody exercising shares. Could be an off exchange routed trade that they're going to put through the dark pool as a way to not disturb price action. But at the end of the day, there's a buyer and a seller. So you cannot just look at, for example, yesterday, I saw this post. $33 million trade, 1.2. Yeah, it's a great size. It's a big number. About 18% of the volume. But on that size, 1.2 million, somebody sold that and somebody bought that. That's what an order is. An order is match between a buyer and a seller. So in this scenario, the way you would properly say this is somebody sold $33 million worth of stock to the person who bought $33 million of stock. A lot of posts on X where people, I think, are just posting to get clicks, likes, and generate their little $40 in X revenue. It's not helping you. It just makes their account look good. And honestly, for those that spend a lot of time, like I'm partnered with Unusual Whales, so those are my people. We see those kind of posts, and we kind of snicker and laugh because it's like you're not really helping the people. In fact, you don't even know what you're talking about. So be very careful out there. I try to post the information that's factual, truthful, that you can source yourself. I cite everything so you can go back and read it, and I present it in a way that allows you to digest it and formulate your own opinion based on the facts and present. It's kind of like a case. So when you see these things, they're buying this, they're buying that. I mean, go back, look. We're not talking about these over here. No, you don't see the ones that are canceled, contingent trade, that get canceled. So yeah, I mean, again, it's an extended hours trade for 1.2. I'm not sure who bought or sold it, but somebody did. Does it matter? Not really. I mean, it's still a large order. It could be anybody. So does it change anything? I mean, you look at the stock, you look at the price. Do you see any changes? I don't. So some of that, honestly, it's going to be dark pool feed. I mean, a lot of people are like, hey, GameStop and AMC, they're the only ones that trade, on the dark pool. That's not true at all. Almost half of all stocks are traded off exchange. So it's not just GameStop. You want to look at Tesla? Tesla trades all day. These are this morning here, but Tesla trades off exchange as well. Let's see what else. Nvidia, there you go. You'll like that one too. These are all off exchange this morning. So, yeah, I mean, it does that. Stocks do. They're not going to run everything through a lit market. Not when a market exists where they can run trades through as a way to not alert the public. That's why it was created, usually for larger, bigger institutional moves. Whether you think there's abuse or fraud or anything going on, good luck proving it, because you see how that works out. If they do, they get a little fine, slap on the wrist. SEC's like, whatever. We don't care if you admit guilt or not. Doesn't matter. So, yeah. But that's what I got for you with GameStop. So we're going to watch the flow. Let's see what the price is as of filming, because we're still ahead of the market open. 27.49. Closed, what, 27.57? Yeah, just watch. I mean, you're still in that earnings gap. You know where the price has been before. You know where the stock has been. If you zoom out, you know where it was last year. See, this time last year, the high, 12.19. Stock's trading at $27. Absolutely nothing to be mad about. The only people that are mad with GameStop are because they bought up here. They bought here, or they bought here, or they bought OTM calls, short dated, at the top on 300% volatility, got cooked. Tried it again, got cooked. Tried it again, got cooked. No. Buy low, sell high, not buy high, sell low. Sell calls up here, buy them back down here. Okay? Buy calls, sell calls. Sell calls, buy them back. Sell puts, buy them back. Many different scenarios. You've seen it. But if you look here on the weekly for GameStop, a longer time frame always helps. Like I said, look where the price is. Floating right over its 200. This is on a weekly, so this is a very long time frame. So that March low of 2073. And then just what, a week ago we saw a high of 28 and a quarter. But you saw where the stock's been. You know where it's been. You know where it's been up high. You know where it's been low. You see where people jump in. And there's your weekly moving averages going, top left corner there. So if you were to watch for price, watch any of those moving averages. If you're looking for any retracement, watch previous price. That's what I always say. That's what I look for. Because GameStop stock appears strong. When that thing dips below 27, it seems like every single time it's bought right back up, whether it's through the option chain, whether it's through common stock. So we go over here to like the 4-hour chart. Here was that gap up for earnings. Now we're back above the 200 on a 4-hour. But if you note here, we got this 21 EMA getting ready to cross over a longer time frame, and a 9 EMA. So when shorter time frames cross over longer ones, watch that. That's kind of a move happening. You get some RSI resets, which are all lagging indicators anyway. But yeah, you're sitting right within the earnings gap up. And gaps fill 90% of the time. And the stock's been here before. So would everybody like it at 30? Sure. Would everybody like it at 40? Sure. But it's still doing great. So you follow it. You follow the flow. You follow the accounts that are going to help you. We try to make you some money over here. Try to help you with SoFi last week. Try to find the little bit cheaper calls that were $17 a piece as opposed to ones that were $38. For my small account traders. We can't leave you high and dry. So yeah, appreciate everybody checking out the videos, checking out the thesis, checking out the idea. And if you watch the video all the way through, you're legendary. Why don't you comment down below or reply to this post? GameStop and Bitcoin. And I'll know you watched it all the way through. But happy Tuesday. Hope you all have a fabulous day. And we'll see you lurking around the internet, mostly in the option flow. You guys have a fabulous day.